The dust is settling on China's reopening, right? So what are the leading indicators telling us about economic activity, particularly in the services sector?
Well, first, everything has improved. So if we're talking about the delta, the change is absolutely positive, right? Now, the service sector is always something that people feel very comfortable with in China because you have a suppression and you have an opening, so that's very obvious. What is not obvious is more the tradable sectors and also the more demand where it's relatively inelastic, right? Non-essential consumptions, and that hasn't been so obvious. The second one is that beyond looking at China cyclically getting better, because no one really questions if you went from suppression to opening up, allowing people to consume, if activities happen, reviving demand and supply, that growth isn't going to recover. But again, the aftershocks of the debt deleveraging cycle, even if regulations are getting better, do get better sentiment. How home prices have stabilized, is it going to significantly accept? Do we expect a significant rebound? The answer is no. Local government debts are quite stretched. Do we expect them to really pull up the economy via public investment? A little bit, but not significant. And moreover, it's really the export engine that were really driving growth, because it's the imports that will really drag, right? Imports, in some instances, went into negative. As a whole, nominally, it didn't grow, which means on a real basis, it didn't really grow, right? So a lot of hope is on this import equation, because we know that exports will weaken from a very high performing level. And that is very questionable as well, because you will get Chinese consumption on consumption goods, but really a lot of China is a global supply chain. And imports for construction, if the real estate market doesn't recover rapidly, imports for exports can be problematic, and imports for high-end electronics and so on and so forth can be problematic. And what that means is countries linked to the positives of the recovery, which is the consumption part, will do better, or sectors or company, right? And then there's the other part, like the Samsung Electronics of the world, that's not only caught between the U.S.-China tensions, but also is part of this global picture that's not getting better in the first half, not part of the picture that will get better in China. Then you're not going to expect it recovery, right? And that's across the region. You can see a bifurcation of performance, and we actually look into this, and Thailand is best. And while Vietnam is going to benefit because it's a big trader, they have too much intermediates, because that would drag them down as well. So you have like a more mixed picture for Vietnam and much clearer for Thailand, which was clearly really leaning more on this trade. But one thing we want to caveat on the service improvement, much of the service improvement is within domestic China. If you look at international outward bound flights, they haven't recovered significantly.